Morning, everybody. How are we all doing? Morning, Evil. How are we doing? Happy Wednesday. Seems like I've been gone an absolute age again. Bank holiday. We have so many bank holidays in May, don't we? It's crazy. Anyway, well, April, May. So yes, back again, Wednesday. We're going to go through today the news. Oh, glasses, yeah. Got my new glasses. I don't actually need them that much. In fact, just, I went and had an eye test. I haven't had an eye test for about 4 years. And I broke a pair of glasses recently. So I thought I'll go and get an eye test, get some new glasses. And yeah, so it turns out I do actually need them for screen work now because I am getting a bit like that sometimes. But anyway, morning, Joe. Morning, Peter. I've worn glasses for about 25 years. I just don't wear them for monitor work normally. So it's a new thing. Right. So yeah, today we're going to go through what's happened this week so far. And have a look at the news because we didn't do the news on Monday. And obviously we'll trade the open as normal. Nice day yesterday. Nice day on Monday as well. So very nice clean breaks this week. It is still a bit choppy out there. Markets open. We've not got a lot of volume today. You can see we've got a gap down at the open on the FTSE, which means there's no volume. There's my pen gone. What's it doing down there? So yeah, whenever you gap down like this, it's because there's no volume in the market. So a large order has the power to push price multiple ticks basically to find volume. So very low volume at the moment, but it doesn't mean it's going to stay that way. So just quickly looking at news to start off with. Obviously we had a bank holiday on Monday. We had the CPI for the Swiss franc, which came out as 0. So inflation now in Switzerland is flat, which means they need to ensure interest rates come down in line. And as you can see, the interest rates in Switzerland are at 0.25. So there is a good possibility, I think, that we're going to see negative interest rates or 0 interest rates on the Swiss franc, which is obviously bearish for the Swiss. So I had a short on from last week, which I got out of yesterday on that news. And as you can see, I think it was 175 or 150 ADR we had yesterday on that. Yeah, about 150 ADR moved to the downside on the Swissy yesterday. So I got out too early on it. I have actually longed it yesterday as an ADR reversal. So I've got back in long looking for a push back up. In fact, I'm going to stick a TP on this because I'm just going to stick a TP around ADR. It's not going to be a massive trade, but I'm just going to see if we can mean revert this quickly before the next leg down. So I think there's probably a good chance we're going to see negative Swiss franc movement now for a little bit. Euro Swiss rallied, obviously. So obviously, if anything happens with Trump, the Swiss franc will rally. So it's only going to be negative for the Swiss as long as Trump isn't driving money into safe havens. So we'll see what happens with that. That can change on a dime anyway, as we know. We had PMIs for the US dollar. They came out as slightly positive, Purchasing Managers Index. US dollar not really done a massive amount this week, if you look. So this is where we are today. That was yesterday. That was Monday. So we opened here on Monday. We are up so far on the week, but as you can see, not even an ADR. So very, very, very sideways Euro US dollar at the moment. So this is the inverse of the dollar index. Not really going anywhere. Morning, Leon. So yeah, totally flat dollar at the minute. Same US dollar CAD, it's just sideways. We haven't got any movement. Market still scared of what's going on with the tariffs. First 5-minute range is in. Yeah, no volume this morning, so no trades so far. So that's the PMIs. Didn't really do anything. We had the unemployment rate for the New Zealand dollar, which came out overnight. Unemployment has stayed the same. They were forecasting a pop, but it has stayed the same. So if you look at the ADRs today, New Zealand dollar, there's nothing to ADRs. Nothing's hit its weekly ranges this week. It's a dead week this week, absolutely dead. So there's little bit of movement to the upside on the New Zealand dollar, but very, very weak. So we've had sort of 3/4 of an ADR of movement overnight, but that's it. So nothing exciting happening. Aussie dollar, New Zealand dollar. I posted this in the Discord. I've got out of some of that. So yeah, took a little partial on it. I'm being a bit cautious at the moment with the position trading account. Just want to ease back into it at the minute. So I'm taking off trades and then doing drawdown control quite quick. So I'm looking to do drawdown control sort of 3-4 positions or 4 trades in a position at the minute. Morning, Ace. So yeah, so that was the New Zealand dollar news. Nothing particularly exciting there. So going into this rest of this week, it's FOMC this evening. So do not expect a massive amount of movement today. FOMC day, we tend to go sideways because the market's not interested in driving tons and tons of movement into the dollar ahead of FOMC because it could be a massive differential. We could have a big drive up or down on the dollar today when that comes out. It's forecast to be the same. I don't think there's any reason the Fed will deviate from that. If you look at the history of the Fed interest rates, they are pretty stable. We had one there where they actually decided to change their mind back in September 2024 last year. But apart from that, it's as forecast. The Fed are pretty rock solid with their forecasts. So I don't think it will change. However, Powell is under an incredible amount of pressure at the moment from Trump to drop that rate. So this could be one of those where Powell caves in and drops it. But I doubt it. We'll see. Press conference is where the market will move. So if that comes out at 4.5, we'll get whipsaw action at the open at FOMC. And then 7:30, the press conference kicks in. That's where Powell lays out forward guidance. I suspect today he's going to tell everybody exactly what he said before. We haven't got a clue where it's going because Trump screwed the economy up. Could go up, could go down. Don't know. Haven't got a clue. We'll be data driven, but the data is being driven by Trump. So, there's nothing they can say to give any confidence to the market at the moment. So press conference is at 7:30, typically somewhere around about 8 o'clock. 8:15, we tend to get that move starting if there is going to be a move. If not, we'll just go flat. I suspect this evening's one will be flat unless we get something unexpected. Tomorrow, we've got the Bank of England rates. We are dropping in the UK. So negative pound potentially. But we'll have to wait and see what the market makes of it. Again, at the moment, very hard to forecast any movement based on fundamentals because the markets are all over the place. So we got a drop coming tomorrow in the pound. I have looked at the pound pairs this morning. That's where we opened on Monday. We're roughly in the same place. We had a big rally up and collapse back down again there yesterday. The pound CAD, slightly bullish. Pound Swiss is bullish because of the Swiss franc negativity. Pound yen sideways, a little bit down actually, and pound New Zealand sideways as well. So as you can see, the market isn't factoring in any movement at the moment. I think it's already done. But as you can see, because we've had all this mayhem with tariffs and everything going in at the moment, let's look at a bigger chart really. There isn't really any movement on any pound pairs. So we've had a lot of volatility, obviously, but no directional bias. So there's no bullishness. There's no bias to the downside. There's just what the hell is going on with the tariffs. That's all the market is interested in at the moment. So again, I don't know whether we're going to get a reaction to that. There will be movement intraday, but whether we get the market decided to take off in a direction, and it would be bearish if it is going to. We'll have to wait and see. Bailey is speaking at 9:40 a.m., which is weird. So we've got no press conference after the pound announcement tomorrow, but Bailey is speaking on Friday morning. Where is that? In Reykjavik. Okay. That's weird. But anyway, I would imagine he'll get questions as to what's going on with yesterday's rate then. So there's potential movement on Friday morning for the pound as well. We've then got unemployment rates. So we've got unemployment claims, which always comes out, obviously, on the dollar. Doesn't tend to do a lot at the moment. An unemployment rate for the Canadian. That's expected to go up. Obviously, things not going well in Canada at the moment. So potentially we've got some more bearish movement coming from the Canadian dollar. But again, whether the market is factoring these in at the moment, don't know. This is not as important as your world trade. Yeah. So businesses run on profit, countries run on GDP. This is all these tariffs are doing is changing what the potential profitability of the countries is going to be. So unemployment rates and things which drive inflation and interest rates, they're not going to really matter at the moment because it's all about trade. So whether these are going to make any difference, I don't know. We will, again, get volatility. So what you'll expect to see is a lot of, sort of movement, but not going to drive it in a direction. There's no fundamental directional bias on anything at the moment. It's just pretty much sideways on most things. So we will see. So there you go. So there's a good example. So that's the last couple of weeks, Aussie US. Yeah, we're just not going anywhere at the moment. We are up a little bit on the week, but it's all very sideways. Everything's very sideways at the moment. Scary. So positions, I'm going to go through the FX pairs in a minute and have a look at them all, see if there's any opportunities to get into some new trades. I've got no specific subject matter this morning, so if there's anything you want to cover, just ask away. But I've got nothing particularly planned this morning because we've got to go through, obviously, what's happened this week and look at an FX setups, basically, because I need to get some more exposure on. I've got a bit of exposure on, but I want some more. So, I'm going to go through all the FX pairs. Let's quickly look at what's going on with the indices. 10-minute range, too small on both. Not going to get a trade on the DAX or the FTSE this morning on the 15-minute range. So it's a case of waiting for the first 30 minutes to go in today and see where we go from there. But yeah, rubbish today. Not a lot happening at all. Got 10 seconds on these ranges. That's not going to be enough to trigger a short, so trigger a range. So gap fills obviously in play at the moment on the DAX. So the DAX has come back to here. The FTSE again has come back to there. So obviously that's where we my broker closed out. But potentially these gaps are filled this morning. So there's no real need for the market to drive, particularly to fill the gaps, but we'll see. So there's no trades this morning. Dead. And again, I don't expect a lot of movement on anything today. It's FOMC, so the market's going to be sitting around. I'm just reading something. So yeah, there we go. Right. So ADRs, obviously, there's nothing to look at today. AWRs, there's nothing to look at. AMR, nothing to look at. It's flat. Yeah. So we haven't got anything that's moved much at all this week, this month. AWRs at the moment, obviously, because we're quite rangy on most instruments at the moment, these are good setups. If you can get a weekly range hit at the moment, as long as obviously Trump doesn't say something, there's a good chance that it will play out because obviously the market is just moving around within roughly an ADR to 2 ADR of movement at the moment. So it's all very, very rangy. ADRs, there's nothing to look at all. RSIs, as you can see, totally flat on the hourlies. The 4 hourlies, all we've got is Euro New Zealand. So I'm going to whiz through the pairs this morning and have a look for some opportunities, see if there's anything setting up at support resistance zones. And just see if there's anything we can get into, really. Euro New Zealand was a good long opportunity yesterday. I did look at taking, was it Euro Odd or Euro New Zealand I looked at yesterday? Yeah, it was Euro Odd I looked at yesterday. So on the 4 hours, looking at this one, because we got a bit of divergence creeping in. But the main reason I like this was because it was at this monthly high. So this is your 2-month high Looking for a little bit of a bounce out of that, but I've got Euro CAD long on at the moment anyway, so I have got some Euro long on. I didn't want to overexpose myself too much on the Euro really, because I don't think it's particularly bullish. Also, I don't think it's particularly bearish at the moment. So I think it could go either way, but we'll whiz through them all, have a look at them. If there's any pairs specifically you want to look at, let me know. If there's any other things you want to discuss, let me know as well. The 3-bar reversal EA I have started to build. My other terminal. Woke up. Oh, Euro odd ADR. It's your first ADR of the day. It's just undone that move. God. So this is my development account. And this is the 3-bar reversal EA. So running on M15 at the moment. So what I've done is I've built an EA to test the 3-bar reversals that we looked at last week. So all I've done is I've created an EA that allows me to completely configure a 3-bar reversal pattern. So if you remember, if you weren't in the live room last week when we did this, we went through and looked at lots and lots of different 3-bar reversal patterns. So obviously there's one there, like a big bull, rejection at the high, reversal, there's a push, pause, pull there. So we're basically just looking at all the different types of 3-bar reversal that you can see. And my goal is to put together an EA so that I can test different variations of 3-bar reversals just to see if there is one specific edge that works better than the others at the end of the day. So, it's a case of looking at this wick here has to be lower than that wick, etc. That wick has to be higher than that wick. This has to close above there, etc. All the different connotations of 3-bar reversal patterns that we can find. So we went through and looked at lots of different variations of it. So the EA that I've built allows me to separate bullish and bearish patterns out, just for belts and braces, basically. But I can set the minimum and maximum upper wicks, the minimum and maximum lower wicks, and the minimum and maximum body sizes for each of the 3 candles. So candle 1 in a 3-bar reversal is the most recent. So let's take this one here. So that is candle 1, that is candle 2, and that is candle 3. Yeah, so 3 in a bearish reversal would be the push, 2 is always the pause or rejection, and 1 is always the reversal candle. So I can fine tune every single one of these to a specific pattern. So I can say the upper wick has to be, the body has to be, and all within minimum and maximums. So it's very, very configurable. And then for filters, I've put filters in for daily high and low. So candle 1 or candle 2, these operate as an or statement, has to be the high or the low of the day. So obviously what we were talking about was 3-bar reversals that happen after a strong push are typically better. So by that definition, the candles in the 3-bar reversal will usually be at the high or the low of the day or the session. So you can filter for those. If you turn those off, it will just take every 3-bar reversal or look at every 3-bar reversal. I've also programmed in a recent high-low filter, which means that the candle 1, 2, or 3 has to be the highest point or the lowest point in the last X number of candles. So I've got it set here to 24. So if you were trading on a 5-minute time frame, for example, that is the last 2 hours of price action. So I'm saying when we get a 3-bar reversal in at the low, for example, candle 2 has to be the lowest candle or the lowest price of the last 24 bars, the last 2 hours. So we need to have pushed down for 2 hours and then up. So what that will allow you to do is if you've had a strong push to the upside and we're in a pullback, if that pullback has lasted 2 hours on a 5-minute chart and you get a 3-bar reversal, you're taking a pullback long. Yeah, so it can also trade or analyze pullbacks. Certain time periods, obviously 3-bar reversals that happen during the Asian session when the Asian session is just going like that are absolutely pointless. So we're not going to start looking for patterns until 8 o'clock in the morning. Server time or 10 o'clock. 10 o'clock would be 8 a.m. UK time. There's an ATR calculation I've put in there. That doesn't work at the moment because I wanted to look at ATR relationship between these, and I was potentially going to use it for stops and things, but I decided not to in the end, so that doesn't work. But it does plot the ATR on the chart. And also trade settings. So you can place a stop loss under candle 2 or under candle 1. And it just uses a standard risk reward multiplier. That's it. So, and I've set a maximum number of trades as well. So it only has one open at a time, but we could have more. And the risk percent. So it's a very simple EA in that all it does is scan for 3-bar reversals and takes them. So I'll just quickly run it and show you how it works. Haven't done any testing with it yet, though. I just built it. I was trying to get it ready for this morning, but I didn't get a chance, unfortunately. So when you come to life, there we go. So what it will do is when it finds one, oh, there we go, there's one. Didn't work out, but anyway. I don't even know what filters I've got set. So as you can see, what it does is it draws 3 little crosses underneath the 3-bar reversal. So pull, pause, and rejection, push, entry, next candle. And at the moment, it's set to use stop loss under the low of candle 1, which is very tight, obviously. Candle 2, probably better. But again, these are all things to test. So that's what it does. It just draws those 3 little crosses just to confirm that is the 3-bar reversal. There you go. There's one there. So strong push, rejection, upside wick, bear candle, entry. So TP, I think, looks like it's set at 3 to 1. Stop loss in this case above candle 1. Out again. What am I trading here? 15-minute pound US dollar. I have no idea what settings I've got set, so I don't even know what it's doing. But you get the idea. That's basically how it works. There you go. There's one there. Another stop out. So this is probably trading the low of the last. Oh no, that is low of the day. So that at that point was the low of the day. Low of the day and high of the day. You probably want a little bit further on in the day rather than at the open, don't you? Because you're going to get false breakouts at the open. So it's probably not a good time to be taking them. But anyway, so that's what it does. Obviously, I've just built it yesterday. Started it a little bit on Monday, but so I need to test it and play with it, and then we'll go from there. Morning outro. So that's what I did. That's what I've got is sort of in the works at the moment. And it might turn out that they're absolute rubbish. I've traded them for years and years and years and years very well, but I pick them and I've never taken them, just taken them willy-nilly, just get in because there's a 3-bar reversal. I always use price action at support and resistance. So that 3-bar reversal there is a good one because it's at a double top resistance. This one is the low of the day. That doesn't mean it's going to reverse, does it? It just means it's pushing down. So you're trying to catch a falling knife. It's what people do all the time. So a 3-bar reversal in a pullback may well be the best thing to do. So these are things that can be tested now. I'll obviously develop the EA as I go, and depending on what results I find, and test different things. But I'll try and get a copy of this for you guys as well when I've got it a little bit more further forward. But yeah, it's in the works. So I'm gonna let this play out for a little bit. I don't know what this is actually set to do, but Doesn't look like it's particularly good, does it? Whatever it's set to do. There's things like trailing stops and break-even stops and stuff that you would, with a 3-bar reversal trading strategy, it's kind of a little bit of a scalping system. So, you're going to want to trail. You're going to want to break even on things after certain criteria. So that I want to build that in as well. But yeah, doesn't look like it's good to do whatever this is doing at the moment. But it works. So. But what I'm interested in, and the reason I really wanted to test this, was I wanted to see what the strike rate is. So this is the bit that I'm interested in. That's only got an 18% strike rate. It's terrible, but I don't know what it's doing. So, but I'm interested in finding those A++ reversal patterns, and I want to try and figure out what is the A++, if there is one, in fact, see if we can get high, sort of a high strike rate strategy, which would be something that would be good to use in prop, taking 2% risk per trade, and having a strike rate 50 plus. It's going to pass prop fairly quickly, isn't it? So that sort of thing is kind of what I'm interested in trying to find with it, but we'll see. But it's all about statistics. So there we go. Right, so that's what I've been working on. Euro New Zealand is your only 4-hour RSI this morning. So we'll start there. So there you go. So that's coming down into a monthly support at the moment. So there's potential for a long there. Not there yet though, but it could well bounce from here. So again, sideways pretty much. So kind of missed that one. So that ADR that we've just had was on Euro Odd, which was the other one I was looking at yesterday. Or rather this morning and yesterday, which was the monthly bounce. So that has bounced beautifully. So if you did take that one yesterday, it's a lovely trade. Wish I had now, but I didn't. So, I'm sorry, that was this morning. So I was, I was looking at it yesterday for a bounce today. That's why it was on my radar, because we were down at the monthly level. Obviously, that was while I was asleep, so I wouldn't have got onto it anyway. But if you weren't asleep, that would have been a lovely one. Right. So what I'm looking at today, let me just quickly look at the indices. 1, 2, 3, 4, 5, 6. 10 seconds. We got no trades today on the European market. So the 6-bar range is about to go in, which is the 30-minute range. No trades. So can't do anything today. This is not moving. There's absolutely no point in trading this at the moment. It's dead. So skip it. Try again tomorrow. But I will be trading obviously this afternoon. So I'll be around at 2:30 for the US session, and we will trade the US instead. Shut that down now because that's not going anywhere. Right, so my current exposure at the moment, Aussie dollar, New Zealand dollar, I've got shorts on. I've taken some profit on this already. I did 0.6% yesterday. Again, I'm getting very low risk at the moment and taking money very quickly. So I've got shorts on this. Break even is there. I got out basically of one profit. When I got to break even yesterday, it was in profit actually in total. But I decided to just take a partial on it because I still think we're going to come and revisit down here. So looking for that kind of movement at the moment. Aussie US I have on as well. So got two shorts on that one. Third short is if we go to ADR today, I'll get another short on this. At the moment, we have broken out of the highs and we are holding that level nicely. So very, very nice. That's a great example of a failed head and shoulders look. Nobody ever sees failed head and shoulders because they don't complete. So that's a great example. If it was a head and shoulders, everybody would have gone, look at that beautiful head and shoulders. But because it didn't complete, no one will see that. Yeah, so next entry on that one, because we've got lovely market structure at the moment, will be up here, which will bring the average up. I'm still looking for a push back down into propulsion, but if I do get the third position on up at the highs, somewhere around about there today. Target will become this area here. So average will skip up, and then I will look to get out around about those lows, just in case we hold these lows and it continues to bounce. There's no real reason Aussie should be massively bullish against the US dollar. Obviously, the US dollar at the moment, Trump, every time he opens his mouth, seems to collapse the dollar. You know, he said loads of stuff yesterday. Dollar went down again. It's literally, he is poison to the dollar at the moment in the stock market. So, yeah, I'm being exposed too much on US dollar isn't really on my cards at the moment. So I've got, I've got very low exposure on at the moment, but I'm making sure I don't get too exposed on anything, just because it could go wild. So got that long on the Swiss yen. So that one I'm looking for push back up into propulsion, looking for the low there to hold. Yeah, so that's a nice support area. We broke down through during the news yesterday with the Swissy, so I'm looking for them to come and retest that area. That's where I'll get out. If it doesn't, obviously I need to scale in down at the weekly lows, which are here. The Euro CAD, let me just go through these other ones. Euro Swiss, I'm looking for entries on the Euro Swiss at the moment. Yesterday, I'm glad I didn't. I was looking at taking a short here. We're not extended on the hourly, but I kind of like this market structure. It's really nice, bearish market structure at the moment. It's very orderly, and that's where I was looking to get in short. I didn't take it because I've got Euro exposure and Swiss exposure already on. But this area here is where we are sort of bouncing out, and this is roughly a 50% retracement. So there is a chance that this could push up now, and the Swiss franc after yesterday's news potentially is going to be long-term weak, which means that this will just grind away back to the upside. So I'm kind of sitting flat on it at the moment, not sure what to do with it. It's kind of difficult to decide. We got propulsion gap from yesterday to the downside, and we got this old one which they resold from last week to the upside as well. So that I think would be a pretty good place to sell it. So I'm hoping we get an extension on RSI, and I'll probably short out of that if we get there today. But obviously we'll get an ADR alert, we'll get an RSI alert. So any alerts on this, I will probably look at shorting that later today if I can get to it. Euro pound sideways. I've been trying to get into this since I got out of the longs. I can't. It's just not doing anything. We had this big push down yesterday. It looked like it was going to break down, and then it came back up. So we're just sitting around in the middle of no man's land at the moment. Could come up and test these highs, could come back down and make this a new low. Could come and retest this support, which it did this morning, and bounce out. You know, it's just a mess at the minute, so there's no point in getting into it. Euro CAD, flat as a pancake, can't do anything with that. RSI is flat. So all you can do really is sell the highs and buy the lows, and that is within one ADR. So you're not even going to get an ADR's worth of movement. I am long from the lows down here at the minute, and I'm looking for basically it to try and break out into this propulsion gap. But in fact, I'm going to stick a stop on it. But you know, you can't do anything with it. It's just ping-ponging around within an ADR. So if you can't get an ADR's worth of movement, it's just not worth trading. I'm in it from the lows, and it's worked out. But this is where I got in, look, right at that low, which was lovely. And I've just been sitting in it. So, yeah, looking for a push back up. Hopefully up into here, if not up into there. And obviously we've got that big propulsion gap there, but you're going to need some weak Canadian dollar. So that is potentially coming this week. There's no news on the euro. So it could go either way. So just super cautious at the minute with everything. It's not worth high risk on anything. It's just not worth trying to predict anything. It's almost like at the minute, the best thing to do is use a random number generator to produce an odd or an even number. If it's odd, go long. If it's even, go short, or whatever you want to do, because it's just ping-ponging around. There's nothing really directional wise that you can do. There's a great example, pound US dollar, got in short at the highs, out, got in long at the lows, out yesterday, you know, and this is one ADR of movement. So This is moving just about an ADR. So trying to get anything more than an ADR, there you go. That's 102 pips. It's 98 ADR. So, just trying to grab that. But I don't want to get in unless we're at a level where you're likely to find some accelerated move from right in the middle of nowhere. I mean, this is a good long at the moment. Potentially a 50% retracement or just under. Pull back into resistance. Bounce. But, you've got half an ADR. It's just not worth taking. If you're using a stop loss, it's worth taking. Drop down, M5. But look, you're getting reversal alert, followed by nothing, followed by reversal alert, which means you're in a range. Can't do anything with it. So, yeah, nothing much there. So I'm going to look through the rest of the FX pairs. So that's 7 at the top. That is my target list. That's what I'm trying to stay within as much as I can to keep the correlation between movement as low as possible and keep, obviously, that will keep the exposure low. However, if I see something that looks really good, I will still jump into it. I'm just not paying as much attention to RSI at the moment because obviously you're not going to get many signals because it's not going anywhere. And the bank's movement is not very structured. It's erratic still, like this, because we are still in that fear of tariff zone at the moment. I'm just going to quickly look at what yesterday's fear and greed was. I think it was just in fear touching on neutral. See, this is all the stuff we had from Besant yesterday. And oh yeah, the other thing as well, you had yesterday as well, India firing rockets into Pakistan. So we got another potential large conflict kicking off over there. So this would be the second part of war. Or third, Gaza. There's so much conflict going on at the moment, and all of this affects economics. It affects import, export. If China suddenly has infrastructure targeted for manufacturing, what's the trade war is not going to mean anything if they can't manufacture stuff to export it anyway. So there's so many things at play at the moment on this market. It's just impossible to predict anything. But so obviously that's happened overnight. We had all this stuff from Besant yesterday to do with the dollar. We had Trump saying a load of extra stuff. Obviously, Trump met Carney yesterday and said, I want you to be the 51st state. And Carney said, sorry, we're not for sale. You're sitting in a house that's also not for sale. Don't be an idiot. Trump didn't have a comeback, which was nice. But that was an awkward meeting. That's not over yet. So, yeah, that's a different thing. But there's Carney. So let me get to the fear and greed. That's the Trump stuff. Oh, right. So we're up in greed. I thought we were up in neutral yesterday. We're not. We're up into greed. So when we get up here, typically this is massively bullish for the stock indices and bullish for the US dollar. So we're getting to the point now where we're starting to get back to a little bit of normality. But if you look at what's happening with the stock markets, obviously the DAX, we've had a lovely big sort of rally, but the US indices still stuttering. We are going up, but we are very much like that. It's like, boom, that's it. Sit around, boom, sit around, boom, sit around. That's all we're doing. So we're still not rallying particularly well in the US markets. It's very gappy. Look at all these gaps, these huge gaps we've got going in all the time at the moment. So the market's still very erratic. In theory, though, we are looking like we might be trying to hold this bear market off. However, it's still just a pullback potentially on a new leg down. So it's very difficult to pick any sort of directional bias on it at the moment. But there is potential for US dollar strength at the minute. We are moving into sort of happier territory finally, aren't we? So we'll see what happens. But yeah, very difficult still at the moment. So baby steps with any position trading for the minute. Right, so oil, I'm just going to look at oil. We were talking about $55 a barrel for oil and potentially down to $50 a barrel. We've done the 55. We tried to get back down to 55 on Monday. It down, completely rejected the gap down on oil. So I'm still bearish on oil at the moment. But if that war kicks off in India, this is going back up again. So again, you know, things are turning so fast at the moment. So at the minute, you've got the downside propulsion gap being tested at the moment. So where we broke down through that weekly low, we retested that and resold it. They tried to get close to it and resold it again. Then we gapped down. Now we're coming to retest it. So great area for selling right there if the sellers are still in place and we don't want to go above that $60 a barrel. So this black line here, as you can see, is a weekly low, and it just happens to be $60 a barrel. It's not, it's 50. It's about 59.90 or something, but it's the psychological big round number. That's $60 a barrel. If it holds below 60, we're going to go back down probably and test 55, possibly even 50. So it's a really good long-term short opportunity on oil there if it holds. Morning, Mark. So whizzing through the rest of the pairs, Aussie dollar CAD, you can see all the black lines here. So that is last week's low, previous week's low, high, last week's high there. Previous week's high, 3-week high. As you can see, they are all within kind of half an ADR of each other. We are just stuck. We have broken out this week into new highs and we are holding, but I suspect it will fail. There's no reason for this to be particularly strong. There's not enough of an extension to get a short on at the moment. You did have a signal go in on Monday. You'd have to be very, very quick on that as a short, but taking the first sort of short after a breakout is always a little bit risky, but it is holding double top. So potentially we're looking to come back down into here. So that looks pretty good, but obviously there's no real signal here. So this is the sort of trade you want to be taking manually. Drop down. Had a 5 reversal alert on it there. And it also has retested. So there's your M pattern. I mean, it's not particularly convincing, is it, at the minute? But yeah, so not really interested in getting into that. It's a really good support area as well. So this is like this kind of rounding bottom and then Trump. But it was on its way down before Trump, and now it's just recovered basically back up into there. So, you know, but anything you get into at the moment, you've just got to be ready to hold it for days, potentially weeks, because it's just taking so long for everything to move. Something's got to really be moving for me to be interested in it at the moment, and it's just not moving. We've still got a lot of upside on the Aussie dollar Swiss. We got about 300 ADR on this, roughly, to the upside. Swiss franc, obviously with that inflation number coming down, interest rates are likely to drop again. If interest rates drop, Swiss franc is going to come down. So Aussie dollar up against the Swiss franc. Looks good. Commodities, though, at the moment, every time Trump opens his mouth, commodities are getting hit. Aussie and New Zealand and CAD are commodities pairs. So you've got the potential for the Australian dollar to get hit as well, meaning that this will just do nothing. So again, it's difficult to call, but I'd like to see some kind of movement on it. You know, from there to there was like about 200 ADR in a period of a week. So it, you know, it has done some fair distance. So look at being up there maybe in a week or so's time. If it's going to continue to drop the Swiss franc, which at the moment it should do. So don't forget as well, as we're moving up into that greed area, if the market is going to rally, the stock market is going to rally, the Swiss franc and the yen will weaken. So if we do rally into the stock market, that will help that Swiss franc weakness as well. So there is a good argument for longs on this at the moment. But, you know, it's slow, very, very slow. So don't expect to make a load of money out of it, and don't expect to make a load of money quick. All the N pairs at the minute are kind of resetting back to support. We have bounced out of that previous support, which was resistance after the initial Trump move. We've come back up and tested that again this morning. So we are making higher highs and higher lows. So market structure obviously is bullish at the moment. Whether that bounce out of the previous 2-week high is your new higher low will remain to be seen. But if it is, you want to be long in it from here because this is a retest. This is the pullback on that leg. Yeah. So as long as we break that high, you should get a good 150 ADR out of this to the upside. So again, it's a good looking long opportunity. You get paid to go long on it as well. I've got a Swiss yen long at the moment anyway, more on weakness of that. But as I say, I'm not kind of want it up there before it does that. I'm expecting it to do that, but I'm just kind of looking for that kind of movement first. So that's a pretty good looking opportunity for a long there. You've got a lovely reversal just gone in, which is potentially the add from this move here. So it looks good for longs, Aussie dollar yen. CAD Swiss, very similar price action on the CAD Swiss, not really going anywhere at the moment. We are just sideways. I used to say this a lot in the streams. Do not trade from the middle of a range. Yeah. So if you see something that's range bound and the price is in the middle of it, it's the worst possible place to take a trade from. You've got a 50-50 shot at the best of times. So if you take a trade from the middle of the range, you are basically placing a 50-50 shot on something that has a 50-50 shot of going long or short. If you get up to there, you've got more probability of these guys helping you to make the price go down or these guys helping you to make the price go up if you trade from the edges of ranges. If you trade from the middle of ranges, it's just flipping a coin. Nothing wrong with it, but obviously if it drops and you've gone long, you know where you're getting in with your second. If you short it and it goes long, you know where you're getting in with your second short. But why not just take your first one from there and your first one from there rather than chancing it in the middle? But anyway, if market structure is going to hold long and it's a very weak market structure at the moment, that is going to be your higher low. You're looking somehow to try and get a bit of a higher high in. So from where we are right now, you're looking at half an ADR's movement, potentially, maybe 3/4 of an ADR before it pulls back. It's just not worth it, is it? But might go from here. Intraday looks pretty good, but you've kind of missed it. It was about half an hour ago. CAD yen sideways at the minute. Very big wide range. You see the monthly levels here. So that's your 2-month high and last month's high and low. That is our 2-month range. Again, where are we? Bang in the middle of a 2-month range. I'd be interested in shorting that. I'd be interested in buying that right now. Could go either way. So, you know, you've got a 50-50 chance of getting it right. So, you know, if you short it, you like it short, brilliant. If you like it long, go for it. It doesn't matter. So you're in here, 3/4 of an ADR. You'll have probably 2, maybe 3 positions on roughly by the time you get to these highs and lows from here. But it's just, you know, it's just not worth personally me risking at the minute. But if you want some yen exposure, nothing wrong with that either. Just quickly looking at the CAD Swiss. Did we look at the CAD Swiss? Can't remember. Sideways, just sideways in the middle of nowhere. So, yeah. So CAD yen we've looked at. Aussie dollar, Euro odd. We've just pulled back into monthly support, and it's bounced beautifully on the hourly. You're against a very large downtrend at the moment on this euro. But that's a really nice quick reversal that's gone in there off the monthly. That obviously move was on the Australian dollar. That's off the news this morning that we've had on the New Zealand unemployment rate. So that is just a whipsaw and an undoing. So, but it has given you a rejection at the monthly low. So they've tested the low. They have found buyers. So potentially pushing back up into here. So you've got plenty of room to the upside on that one at the moment as well. I can't take any more exposure on the Australian dollar personally. I'm already exposed on it. So euro odd, no good for me. But yeah, looks good up into here. I can't see any reason for the euro to be strong at the moment though. I can't see any reason for anything to be strong at the moment, to be fair. There is no fundamental advantage for any currency pair right now. So, you are literally just taking a chance on which way Trump's going to drive everything next. So, Euro Yen, middle of nowhere. It's pulled down and done an A-shaped recovery on the previous week's move. We have bounced out of that weekly low, which is lovely. But again, we're not really going anywhere. Intra-week, that was your hourly RSI extension to the downside. Long, fine, absolutely no problem at all with that. Looking for it to push up into these propulsion gaps, which it looks like it's probably going to be able to do today. Possibly even getting back up into those highs. But you're in a very uneven range at the moment. So you've got sort of lots of different highs and lows roughly around that area. You've got recent ones here which have just been retested. You've got this old weekly one here. You've got a new weekly one there. You've got this old double top monthly, which we just poked our head out of. So, it's really, there's a lot of places this can bounce at. As long as it bounces, you can't really get it wrong. So wherever you get in, if you decide to take a short there and that doesn't work out, there's a high probability one of those four is going to work out and it's just going to bounce out of it by 50%, which is all you're going to need to get out. If you take the long here, then you're looking at these lows here, somewhere around there for a next entry. If that doesn't work out, you're coming all the way back down into here. There's a big old drop there with nothing in it. So, it's, I think, easier to short it, but it's too expensive. I can't short it at that price. Just in case, obviously, the yen suddenly decides to go into free fall for some reason. China could decide to attack Japan or something. Everybody's attacking everybody at the moment, aren't they? So, but you can't plan for that in the future. So just know that that's really expensive to short at the minute. So longs were the order of the day back there, but that's obviously already gone. So if you wanted that one and you're in it, that's great. Euro New Zealand week, we got a monthly level coming up, which is good. That's ADR today again. So again, same as this Aussie New Zealand. I like it long at the moment, but it's not quite where I'd want to get into it. And I've already got some euro exposure on at the moment, long. So I don't really want to overexpose myself on it. I've got double short exposure. I've got double long exposure on the Australian dollar. So if I was to take this, I'm basically shorting the New Zealand dollar or shorting the Aussie dollar, which basically hedges me on that, which is not the end of the world. So just it doesn't quite fit. This euro odd and euro New Zealand doesn't quite fit with my portfolio at the moment. But obviously I could close out euro CAD today. And then that opens the door up for me to just get in long on that at some point. So, but right now I like it long. It's good. We're down at this area of really decent support. We've held this area over and over and over again. We have just tapped into it just shy of the monthly. So this could be it. This could be where it bounces from. If it doesn't, though, you've got kind of an ADR of movement to the downside to scale in and then look for an exit on that. And it is extended on the 4 hour. So it was. Didn't quite get an extension on the hourly, though. So this is what I'm monitoring at the moment. It's just not popping up on my radar. So because it's just sideways. It's just not enough movement, really. It's quite tricky to get into anything. Euro US dollar. Trump's next move. Don't know what to do with that at the moment. I'm just not doing anything with it. There's no point in getting involved in the euro US dollar. Short term, small time frames, absolutely fine. Lovely intraday movement, really good up and down. But from a position trading perspective, it's very difficult to pick where this is going at all. So you've got this lovely high here, which held yesterday. Didn't quite get to it today. But if that hits that area again, I suspect it'll probably bounce through it. In which case that would be where you want to short, somewhere up here. But it's sideways, isn't it? So, There's nothing you can really say I'm bullish or bearish on this. It's just sitting there. So if in doubt, stay out. There's absolutely no reason to get into this. So yeah, just sit and wait. There's nothing you can do with it. Wait for Trump to make his next move. Pound odds broken down out the lows and retested this morning. Yesterday. So this really strong support, which held and held for weeks and weeks and weeks, finally broke on Friday. We have retested it yesterday and immediately they sold it back off again. So shorts really on this at the moment. But saying that, your monthly low from last month has just been bought up as well. So you're bouncing between a very strong weekly support and this monthly support at the moment. So if the monthly is going to overpower, you're going to just get stuck down here, very similar to this. So selling up here, again, not a bad idea. 125 ADR extensions, short it. But if that breakdown that we had on Friday is strong enough to hold, which it was yesterday, these propulsion gaps here for a short, when we break out of that level, you've got a good sort of 150 ADR drop to the downside. So difficult. But pound, if you look at the news at the moment, tomorrow's announcement is bearish. So it could be, and obviously it depends what Bailey says, but it could be that we are seeing the start of the breakdown on the pound. And this move that we saw breaking out here, if you look at the other pound pairs as well, yeah, we had this move last week that sort of quickly sold off. That is potentially the start of the down leg for the pound now, because we're seeing interest rates starting to drop, which is going to slightly weaken the pound moving forward. So I'd kind of like the pound short at the moment. This is a great area to get in, look, as a short. I don't think I've got any exposure on the pound at the minute. No. I'd rather be on the pound US dollar at the moment, which I got out of yesterday. Not really a reason to take a short there, though. So, but that pound odd looks good. Pound CAD equally looks good. We're selling out of propulsion, look. So we had that lovely big strong push up, and then we pulled back down again, retested propulsion, and it bounced out. Retested propulsion, it is bouncing back out again. So if we are going to see a high, a low, a lower high, you're looking to break those lows and continue to the downside. So all these pound pairs are looking pretty good. There was an RSI extension yesterday on it, but you couldn't get into it because it's too fast. Lovely. Oh, look at that head and shoulders. Yeah, there's one that worked. Very easy to spot when they work, aren't they? But if that had done that, you wouldn't have seen it. But yeah, so you had a reversal alert there yesterday on that candlestick. So that was your entry from yesterday, which would have beautifully turned out. There wasn't a 3-bar reversal on that one up there anyway. So yeah, I like that short, the pound at the moment. Any of them really. Pound Swiss is probably not the best one to take because the Swiss franc is currently weakening. So if you get a weak currency against a weak currency, it forms a range. So there's no point in getting short on that at the moment. Pound yen's not really doing anything at the minute. It's kind of being pushed around. So there's a lot of upside propulsion gaps on this. So if we're going to get a continued weakness in the yen, which did happen after they didn't drop their interest rates or pump their interest rates, it's going to find the pound's going to find it quite hard to drop against something that's dropping. So again, weak against weak equals no movement. So that's probably not the best thing to take. Pound New Zealand or pound odd potentially would be good, assuming that the commodities markets don't. Actually, if the commodities markets collapse, yeah, that's going to undo that move, isn't it? So we'll see. But yeah, pound odd, like the look of that as a short. Pound New Zealand, also like the look of that as a short. But again, they're not RSI extensions. We're not getting enough movement to get really any decent RSI extensions at the moment. 4 hourlies kind of looks like a long, but if you look at it, you know, it's not very convincing, is it? If we did get back up to there, you're only looking at a couple of ADR before you put a lower high in. But yeah, difficult. It's very difficult to analyze anything at the moment because it's the opposite of what I do at the moment. It's all very range bound. So, I'm looking for push, exhaustion, and correction. This is not push. There's no exhaustion here. There's just bounces. But bounces, I have always found very unreliable bounce plays most of the time. But at the moment, obviously these all look like they could go either way. But fundamentally, pound definitely a little bit more bearish than bullish. So looking for pullbacks on this yesterday and today leg for shorts. So if it doesn't go from where it is now, pound New Zealand is not as clean as pound odd at that propulsion gap. We're looking at pushing up into the propulsion gap at ADR. Yeah. So it's basically this breakdown is what we're playing. Continuation short on that. So expensive to trade. Pound New Zealand's better. But then I'm going long on the New Zealand dollar and I'm already long on the Australian dollar. So there's just no point. So this is where your correlation, your experience and knowledge of correlation comes into it. I've got two longs at the moment on the Australian dollar. Australian dollar and New Zealand dollar move together. They're both commodities pairs. If I go short on this now, I'm shorting the pound, which means I'm longing the New Zealand dollar. I've already got double exposure longing the Australian dollar. So I'm just tripling my exposure on Australasian currencies, on Australasian commodities. I'm also, by being Aussie New Zealand long, short New Zealand dollar. So if I go long on this, short on this, I'm basically doing the opposite on the New Zealand. So I'm hedging the New Zealand dollar. So it's just a nonsensical trade to take, basically. Short. Yes, I'm short on those two. Short on Australian dollar, yeah. I should have the exposure open, shouldn't I? Because that's the whole point of it, so I can see where I am exposed. That would make much more sense. So yeah, there we go. So there's your pound pairs. New Zealand. So again, all of these moves that we had, these commodity unwindings, if you like, are kind of sideways now and have been sideways for weeks. There's not really any directional bias again in these, but again, high bounces and low bounces are probably the best thing to get involved in. The market doesn't seem to want to go much further than it previously did. So any kind of moves down below these levels will be good for longs. Any kind of moves up into these highs will be good potentially for shorts. But obviously you're looking at 1 week's worth of movement really to get an ADR out of it at the minute. So there's no extensions going in on it. You're trading a commodity pair against a commodity pair at the moment. Shorts out the highs. There is a possibility, I think, that we could be looking at breaking down into this area and correcting out of it. But again, it's very, very difficult to call at the moment. This propulsion gap is likely to be orphaned if we are going to just rally away from here, i.e. weak Canadian dollar. But at the minute, there's just no reason to get involved in it. It's just, as you can see, this whole last week and a bit, it's just basing around on RSI. There hasn't been any good solid strength in either direction. So it's very, very grindy. So if it's going to be very grindy, you want to be shorting it because we're above the high of the range at the moment. Ideally, an ADR hit today, somewhere up there is worth getting into shorts on. But apart from that, there's no real reason. You can obviously take a propulsion gap bounce as well at ADR. So you've got ADR and propulsion working in your favor, assuming that that is going to just pull back and continue up into this area here. Again, nothing particularly clean or exciting. New Zealand dollar Swiss, we've had the move on the New Zealand dollar, obviously, from the news this morning. We didn't even get an ADR, but that is your monthly high from April. And then it's Is that the monthly high from April? Yeah. That's interesting. So that's March's low. That's April's high to the pip. So yeah, that would be a lovely short, double top short today. If we get there, I'm going to stick a little alert on that. 60. It means me new. This doesn't make exposure sense to do it, but from a technical perspective, it's beautiful. But it means basically shorting the New Zealand dollar and longing the Swiss franc. Inflation just fell to zero. They've said they're going to drop interest rates. It's not going to be bullish, is it? So why would you press the buy button on the Swiss franc? Unless Trump says something, obviously, which is the best thing to do. But yeah, that looks like a really good looking short opportunity. I'm just going to set a little alert up there. If that doesn't hold, that previous monthly high there and there, so it's this resistance here, and then obviously somewhere up into that previous support, broke down and retested. So that is where you are looking basically to push up into. So if we break this high here, there's nothing but clear air there. So that is literally where you're going to get to. You're talking 300 ADR. So by the time, if you're getting short here and it doesn't work out, you're probably looking at 4 positions. And I would say potentially 2-week hold or something on it. But if it holds, you'll be out of it within a week. So there's a big old target to the downside to aim for on this one. So I kind of like it as a short, but again, it's a balance between exposure and trying to stay as uncorrelated as possible at the minute. So just got to get into stuff. The longer I go looking at things and looking for setups and finding nothing, the more itchy your trigger finger will get. But without exposure, you can't make money. So you've got to be able to sort of balance the two to some extent. It's too expensive to short this New Zealand dollar yen at the moment. And it's not really going anywhere. It's ever so slightly grinding up. But yeah, again, ADR hit today will take you up into the last week's high. And as you can see, that's the previous week's high. That's the previous week's high. That's the movement you got. So 3/4 of an ADR above last week's high. The previous week's high. Last week's high, we managed to make roughly half an ADR. So if you look at getting up into ADR today, if that bounce doesn't hold, you've got a monthly resistance and another monthly resistance. So maximum really you'll get out of there is 200 ADR. But the last 2 weeks, it hasn't managed to make it more than half an ADR out of the previous highs. So if we do push up into there, good looking pullback, you're not going to get an extension on it though. So, or you just jump in long now and say, right, we're going to break that high by half an ADR. Try that. But not really conducive to trading at the minute. New Zealand dollar, US dollar, monthly high from April. It's just side. You can see whenever you see the weekly range highs and lows close together like this, it obviously means you're contracted and in a range. It will break out at some point, but shorts at the moment up there look good. So again, lots of reasons to short this New Zealand dollar at the minute, but yeah, not quite getting there. I just want to see something that looks awesome. I want to see a beautiful bounce there. What I've been doing at the moment, because obviously I haven't got the EA set up on all the other pairs, is I'm obviously hitting the sell button and I'm taking a lot of manual trades, but same thing, just doing it a little bit more manually. So what I've been doing to get into most of these is just using pendings. So if I'm just going to set a little alarm up there as well. So if we get up to here today, as soon as that alarm goes off, all I'm doing is setting a sell stop order, which will put the sell stop order underneath the low, and then just trail that sell stop. So if it comes straight off of there, I'm straight in. If it pushes up above it, I'll get in above it, wherever. So I'm just using sell stops and buy stops at the moment at lows. Because obviously when you get those triggered, it means on the lower time frame you've had a reversal alert. So on M5 or an M15, for the hourly to have triggered, it means you've had a reversal alert on the lower time frame. So I'm just using the stop orders at the moment to get in. That's a good looking short. Again, I like that one. I've got long exposure on the US dollar at the moment. So shorting that New Zealand against the US gives me another exposure long on the US. So that'll be it for US for me if that was come on. But if it doesn't get there at that high, I'm not interested. I want it perfect. Absolute mess, US dollar CAD. These two obviously have been shooting each other with trade tariffs. There is no advantage for either of them. So we're not going anywhere. Obviously, the US dollar is weakening slightly more. The thing that concerns me about this is that if Trump decides to change his stance on these tariffs, I don't think he's going to, by the sounds of things. But if he was to, we didn't think he was going to do it in the first place, but he did. That could dramatically power this US dollar up, and it will move very, very quickly back to correct itself. So I'm a little cautious about obviously overexposing, but these lows here are holding very, very nicely. But we're getting half an ADR, 3/4 of an ADR, a bounce out of it. It's just not going anywhere, so you can't really do a lot with it at the minute. But stuck. Same with the Swiss. Yeah, just dead sideways. So it's the sort of thing where you can press the buy or the sell button and wait. You might need to wait a day or two, but at some point it will go into profit because it's just going up and down. But this is really contracting now, look. So that was the previous range that we formed there. And now the range has contracted to this. So we're an inside range, if you like. So when that breaks or that breaks, there's a good chance that it will start to move. Upside move, you probably only got half an ADR, 3/4 of an ADR. Downside, you got loads of room. So it's just not a lot you can do with it from a technical analysis point of view. There isn't any. It's just flat sideways. Stick moving averages on it. Doesn't matter which moving average you stick on that one. It's sideways, isn't it? And US dollar yen. Again, bearish. Bearish dollar at the moment. It is starting to tick up. Market structure has shifted back to the upside. Potentially, this is where you want to be buying it, which is good because you get paid to hold this. But if Trump says something stupid, you're going to be back down there, aren't you? So it is a good-looking long at the moment, I have to admit. I like it from where it is because you've got a higher low just gone in here. So you've got a double bottom out of propulsion, and then you've got a higher low just been placed. We're just about to get a reversal out on the hourly. So in theory, we're looking for a higher high. Worst case scenario, we are going to put in a lower high and break back down, which means you'll come into this propulsion gap. So there's so much room. I say so much room. You've got about half an ADR there into that propulsion gap. But that's enough room for you to get a break even on it if you want to, and assume that we're going to put that higher high in. Yeah, and just continue that market structure long. Looks really good for longs. Again, tempted to take that. I have only got the one exposure on the dollar at the minute, and they will pay me, but it means longing the yen. In a downward market. Very tricky at the moment. It's very, very tricky to decide what bias to have on anything. That was the entry really yesterday. The 5-minute reversal alert yesterday, or the 15-minute reversal alert yesterday, was your entry really on this. So if we look at where we are at the moment, that's holding as well. We're not far away, are we? So I'm tempted to take that, seeing as I'm going to be paid to hold it. And we're coming out of daily support as well, look. So reversal alert, retest on the daily. I'm getting it. I'm taking it. I'm going long on that US dollar yen. I'm just going to jump straight in on it. So my next long will be on a retest of either this 2-week low, which held, or last week's low, which was a double bottom. It would have to come, it's going to be quite tricky to get another one on that. But that would be second entry. Third entry would be down here. So if this is going to just continue to grind down into here, I'll be looking for a correction on that leg. So if it's the way I'm reading this at the minute is we're in a bullish market structure. So my plan A is higher low bounce and to put in a higher high, profit up there. If it doesn't work out and we are going to double bottom and form a range, that's second entry, and we'll get out on the range formation. If this is a low, a high, low, lower high, lower low scenario, it will be a scale in on the way down to this monthly low, and I shall look for a bounce out of that to escape before it drops. Plan. But all the time I'm being paid $10 to hold it. So I've got the Swiss yen at the moment as well. So I'm short Swiss yen. So I've got hedged exposure now on, sorry, I'm long Swiss yen. So I've got double exposure now on the yen. Not that worried about being overexposed on the yen at the moment because it's not dramatically strong, is it? So we will see. So there we go. So that's what I've got on at the minute. Just struggling to find opportunities at the moment. It's very tricky to get into anything with this nonsense we've got from Mr. Trump. Not sure if it's just me, but the 3rd degree burn from Trump fires is making me even more cautious than ever. Yeah. You have to be at the moment. It's if you look at the news yesterday, it is still everything is being driven by all of this noise around Trump. It's further back. So all you get is Trump. There is no reason for the US to subsidize Canada. We don't really want cars from Canada. This was his meeting with Carney yesterday. Some things about USME have to change, is what Carney said. Stop asking how many deals we're signing. Some cases we'll sign some trade deals. It's all, as soon as he opens his mouth, that is all the market is interested in. What is he hinting at going to happen next? And they will overreact because there is so much fear in him doing something crazy. So, you've got to keep your exposure low. My risk is tiny. My exposure is, being hedged at the moment is not a bad thing. If you've got a long and a short on something, it doesn't matter what Trump says. If it affects that instrument, you're going to get a win. Vast majority of stuff that we see Trump saying at the moment gets undone. And, if you go back to the live streams from December last year, before Trump came in, when I was explaining quite a lot about what happened last time Trump was in, 90% of the moves caused by anything Trump said were mean reversions, A-shape and V-shape recovery moves all the time. I basically said all last December, as soon as Trump says something when he gets in, wait for the market to move and then just short it. Fade everything he says, because it's exactly what happens. And a lot of this stuff that you see here is market. Look, there, perfect. Market crazy, react. Oh, actually, no, it doesn't mean anything. This is what you get. V-shaped recoveries all the time, because it's a case of the market will just suddenly panic and liquidate assets, liquidate profit, stick money in the bank, hedge things. Yeah, so a lot of these will be hedges going in. So you've got exposure in one direction. Trump says something crazy, you just hedge the deal. and you wait to see what the impact of it is. And when the analysts go, well, if he does this, it's not really going to make any difference, you unwind the hedge and you get the opposite. So this is the hedge being placed, the unwinding of the hedge, or it's the exiting of the position and the re-adding of the position. So this is what you get with the vast majority of this movements. But you get the odd thing he says every now and again when the market just goes, what? And it goes into super panic mode, and that sends everybody spiraling. And this is what we had with those initial tariffs. We had wind of the tariffs and the market started to get a bit what? And then the tariffs hit. But since then, you're going to get a lot of movement, which will undo itself. And it's causing what looks like normal market structure, and it could well be normal bank market structure starting to come back in. But you'll find that these moves that you see happening are only caused by Trump stuff. So it's not that the market is moving on fundamentals, it's moving on Trump. So that's the difference that we have at the moment. And obviously, if he decides to say something positive or negative, or do something that impacts some currency positively or negative 3 times in a row, you won't get the pullbacks. That's where you're going to get into a squeeze, which you can't do anything about until he says the opposite thing. You can't rely on one man causing you to make money in these markets. It's just not, this is not how it's always worked, but it's the reality that we're in at the moment. So exposure low means if you do get caught the offside on something, you can survive it longer. If you overexpose, you're not going to be able to survive. So, maximum double exposures. Anything more than that, even with small risk, you're going to find there's potential for damage. So I'd rather make a couple of grand a month at the moment on the position trading side of things to keep my eye in, if you like, more than anything, and not have to rely on it, but use it as kind of bumps, if you like, extra income, if you want to. At the moment, where it is short-term timeframes, but they are impossible to predict. Short-term timeframe trading is very, very difficult. The breakout strategy that I've been running, which we were looking at quite a lot, has fallen foul of the ADR trap. So the ADRs, as they expanded and contracted, really hurt that strategy because it was struggling to get into any positions, which meant that you had to shorten the distances. And then, of course, we went into a few range days, and it got hurt really badly. So that needs, and again, that's something I haven't worked on yet, but it needs to be adjusted to ATR. So we need to rely on what's happening intraday rather than on a day-by-day basis, because day by day at the moment, we're like seeing 200 ADRs, nothing. 150, nothing. It's like very odd movement, isn't it? So, but, these odd times, it may be that we need to move away from ADR and switch back into sort of an ATR-based mode. Or as I'm using on the position opening range breakout at the moment, using short-term ADRs, using 3-day ADRs. But again, they are very volatile. You're going to be all over the place. For scaling into positions, short-term, not great. DAX and FTSE. FTSE's broken short, DAX is broken long. So got divergence today. There's your gap fill. Good looking long opportunity on the FTSE out of that gap fill. If that is going to be your low, that could be potentially a market structure reversal going in, but it is also bearish market structure. It's just a mess today, isn't it? Glad I'm not in it. This is why these rules are here. If we don't get any movement, don't trade it. It's just not worth it. Small suggestion, if I can, on the TP dash, maybe moving the green and red arrows on the left of the respective lots on the open positions. That's difficult because the way that this works with spacing, it's hard to put it that side. And it looks, I did actually do that. I put it there and it looked odd. And the problem is, if you adjust the text size, I then need to incorporate a spacing input for the arrow and then an arrow size. And there's like 3 inputs required just to move that. I did look at doing that because it's not ideal the way that works, but it's also quite difficult technically to do that. You see what I mean? So yeah, it's something it's on my list of things. I've got a little list of minor improvements that I'd like to make to it, which I haven't got around to, but that is on it. I was looking at the idea of basically putting the arrow down here as well, which I might look at again as an option and remove it from there and then call that long, short instead of lots. Or just change that text to lots, to long and short. But the arrows are handy, so it's on the list. Yeah, it's to do with if you adjust the text size. Oh no, not that one. It adjusts these arrows, so it's to do with the spacing here, which and the alignment as well. It's really complicated. This is the problem with MT4 and MT5, because it's a charting platform. It's a little bit archaic in the way that it handles text. There's only 2 ways you can kind of lay text out, and none of them are ideal. Neither of them are ideal. It's just not really designed for text on chart. It's not the graphical user face is not designed for that. It's designed for charting and plotting. It's not designed for text. So when you try and build dashboards, it's actually quite a complicated thing to try and get text alignment right. It's a bit archaic, fortunately, but yeah. A fixed color background for lots text. If you do that though, you'll get confused with when these light up, reds and greens. The reason that would, I think, be a bit too overkill. But yeah, putting long and short in there, and moving these arrows down, I think is probably a better thing to do. I'll have a play with it at some point. It's the same with these arrows here. That works fine. Look, but if you remove that, all of the text, you need a separate input for spacing around arrows. It's very hard to make them dynamically adjust because it's just the way that it handles text. It's just not very good. But one of those things. Right, there we go. So I'll leave it there today. EuroCAD. So from a banking perspective today, EuroCAD is an option. Might get some money out of that today. That's at break even. So I'm just trying to limit downside at the moment. Swap costs, again, getting silly expensive. But anyway, so yeah, we'll see how we go. But I'm looking for a push up on that one today. Not really sure we're going to get any movement or anything else. Most likely today, what will happen is if we can push up into ADR, we'll bounce out until FOMC. So just bear in mind, obviously, today is FOMC day. So sideways is the Order of the day. I intended only the words lots, but long and short is even better. Yeah. Yeah, but it makes... That was what I was going to... I think that is what I had in there originally. But I had lots long and lots short. And what happened was it ended up these columns were like that long. And you only had that much. And there was a big space. So I thought, if I can just put an arrow to designate long and short, that'd be great. But it just doesn't quite work when you change the font size. The original font size on this was 10. That's why. No, sorry, it was 12. So that was the original. I don't know what the default is. That might be default. It's 10. I defaulted it to 10. But if you go 12, which is what I originally had it at when I designed it, it's fine. Well, it's better. But there's a lot of information on the dash. This is the problem. I'll play with that. It's on my very long to-do list. Right. So that's all for this morning. If there's nothing else you want to discuss, there's very little we can do with these today. It has broken short, but, not very cleanly at all. And that one's broken long, but not really, has it? So it looks like the FTSE's coming down today. We've had some negative news on... Obviously, we've had this massive cyber attack in the UK. So we've had Co-op, Harrods and Marks and Spencer's all being attacked. So we've had a lot of share prices dropping. So, that's affecting these stocks at the moment. Beautiful breaks yesterday. Lovely. But we are kind of coming into an accumulation. So you're probably going to find we're not going to slam through this area. We're going to find it quite difficult to get through that, I think. So I wouldn't hold up much hope. I'd more likely see us doing that. So US markets this afternoon as well. Be very careful. There's an argument today for not overexposing. You can see the US markets at the moment are 100% in sync pretty much. So getting into all of these, if we go into accumulation ahead of FOMC, is going to be quite bad today. So I'm back on this afternoon at 2:30. I'm going to see how the markets have reacted this morning. We've got no news that's really going to move them today. So I think it's a case of today just sort of hovering around really and waiting for FOMC. I might just trade one this afternoon, or maybe two. I'll see how they open. And if they all open exactly the same, I'm going to probably reduce some risk because there's no point in getting into everything. Just going to overexpose today. All right, so that's all for this morning. If there's anything you need, let me know. I have also opened up today a coding page. I posted it out this morning. So MT4, MT5 coding, I thought I want to offer it as a service as well, on a quote by quote basis. So if people want anything coded, indicators or EAs, obviously I can quote on that as well as work. So I've put this back up on the website, which is a page I had ages ago, but I've redone it a bit. So while I'm doing all my coding, I've got loads and loads and loads and loads and loads and loads of pre-built code. So I can actually knock EAs and indicators up fairly quick. So I thought I'd put that up there as a little test just to see if there's any interest from people wanting to have their own things built. So if there is anything you've got an interest in, let me know. I'm just going to do it on a quote by quote basis, really. Obviously, I'm not going to be as cheap as someone in India working on $5 an hour, but someone in India working on $5 an hour isn't going to have the experience. So it's more of I'll code it for you, but I'll also guide you with have you thought about type thing in these as well. And obviously if people find good strategies that they're happy to share, brilliant. Or if you want to monetize it, even better. There you go. So I'll put that up on the website. So if you know anybody that's interested in getting anything coded, and they're interested in the quote, let me know. Right, I'll leave it there. Anything you need, let me know. Other than that, I'll be back this afternoon at 2:30. We'll see how we get on with the US session, and then we'll prepare for FOMC this evening. Right, so have a good one. Anything you need, let me know. Otherwise, I will see you next time. Have a good one.